Good afternoon, everyone, and a warm welcome to Eco Business's Unlocking Capital for Sustainability virtual event. This is the first time we are having it in Malaysia as part of our regional sessions. Thank you so much for taking the time to join us virtually today. My name is Samantha, and I'm the regional correspondent with Eco Business based in Malaysia. For those of you who are new to EcoBusiness and our annual Unlocking Capital for Sustainability series, allow me to share some background. Established in 2009, EcoBusiness is an independent media and business intelligence company that is focused on sustainable development and ESG performance. We are headquartered in Singapore and have a presence in the US, China, the Philippines, India, and now Kuala Lumpur, Malaysia. Unlocking Capital for Sustainability, or UCFS, is our flagship sustainable finance conference and back this year for its fifth edition. We are featuring 4 regional virtual dialogues, starting with Malaysia and continuing on to Indonesia, Philippines, and India, before culminating in a hybrid conference in Singapore on the 20th and the 21st. For this session, we turn our attention to Malaysia's climate resilience and how we can better attract capital to build this climate resilience. In December last year, Malaysia witnessed what many called floods of the century, which affected 7 states and caused an estimated 6.1 billion in losses. But recently, heavy rains due to the monsoon transition and La Nina phenomenon have perpetuated these concerns, especially for Malaysians living in flood-prone areas. That being said, the Malaysian government has made recent progress in sectors such as energy security. On Monday, for instance, the Prime Minister, Ismail Sabri, announced that the government is approving the allocation and redistribution of a renewable energy quota for 1,200 megawatts for solar resources in a step towards our energy transition away from reliance on fossil fuels. But also earlier this week, our stock exchange regulator, Bursa Malaysia, announced 2 new ESG-themed indices, namely the FTSE Bursa Malaysia Top 100 ESG Low Carbon Select Index and the FTSE Bursa Malaysia Top 100 ESG Low Carbon Select Sharia Index. So in a nutshell, these 2 indices will track companies in the FBM Top 100 Index based on their ESG and carbon intensity performance, catering to investors who are looking to factor in lower carbon footprints when building their portfolios. Now, in addition to such initiatives, how can Malaysia continue to attract sufficient capital to build climate resilience and green infrastructure in the coming years? Our session today will focus on how we can become a more attractive market for sustainable investment and how we can actually deploy this capital effectively. Now, EcoBusiness Director Junius Yeo will be moderating the panel discussion. Allow me to briefly introduce the speakers. The first is Shazwan Haris, who has asked us to call him Juan, who is the head of strategic investments at the Employees Provident Fund. And we also have Professor Dr. Jomo Kwame Sundram, senior advisor at Khazanah Research Institute and visiting fellow at the Initiative for Policy Dialogues. Over to you, Junice.
Thank you so much. Thanks, Samantha. A very good afternoon to all of you. Very happy to be kicking off, in fact, the inaugural Regional Unlocking Capital for Sustainability 2022 event. We're so excited to be kicking this off with Malaysia, just knowing full well the developments that has happening in the past few years, and particularly even as Samantha talked about the past month, we've got lots and lots of great, very interesting developments already taking place, addressing climate change really by the horns in a way. So without further ado, of course, Samantha has already introduced our 2 guest speakers, very distinguished and so thankful that, they're willing to spend an hour and a half with us today. We're going to go straight into the panel discussion. And of course, in the meantime, as we're going through the questions, I'm sure some of you would have other ones that would pique your interest. Feel free to, put that into the chat box and we'll get to it, towards the latter half of the dialogue as well. Okay. All right. So first up, I'm going to ask a very simple question to set the context. And really, it's a very simple question, but a lot of the audiences here understand what climate change is perhaps looking like. But a lot of us want to understand what climate resilient Malaysia looks like. And perhaps I could invite both speakers to share your views about what would a climate resilient Malaysia look like to you in your lens. Perhaps I can start with Professor Jomo.
Thank you very much, Junice, for this invitation, and thanks to EcoBusiness. A climate resilient Malaysia is something which I think is always a moving target. And part of the reason it is a moving target is because the full impacts of climate change, particularly global warming, are still still not very well known. And so we are talking about a whole situation which is constantly changing and unfolding. Most of us think of climate change in terms of global warming, and we think of the immediate consequences of global warming. But very often we ignore or tend to ignore some of the longer term and much more interactive consequences of global warming, which can be very difficult to predict. Now, the IPCC, the Intergovernmental Panel on Climate Change, has been trying to advise the international community on some of the consequences of climate change. We are, for example, now in a situation where the IPCC expects that instead of trying to reach 1.5 at the current rate of change, we are probably likely to reach 2.8 at least. The situation seems to be even worse, especially with developments over the last half year, where we see the outbreak of war in Ukraine, causing a whole range of problems, where Europe, for example, after gallantly pronouncing in November last year that it wanted to ban coal and move very quickly to eliminating coal, which I think is a desirable thing, not only because of the problems of coal and its contribution to global warming, but also because of some of the other consequences of using coal. In Malaysia, for example, we do not even have what is called clean coal. So this includes the emission of sulfides and sulfates, which strictly speaking are not global warming issues, but nonetheless are very serious issues which affect the communities which live around these coal-fired generators. Now, all this reminds us that we are really off track, and many things which were not very apparent to us before are now much more apparent, but there are also consequences which further down the line, which we simply don't know very much about and which we have not prepared. So climate resilience is not something which is set in stone, but I think it is very important to recognize that in the 5 years preceding the pandemic, for instance, the planting season for rice in the main rice bowl in Muda was cancelled not once, but twice. In other words, 1/5 of the rice output has pretty much gone. Now, we also know that in countries like Vietnam and Bangladesh, seawater is going into the rice fields, and so the consequences in terms of food production are very, very serious. And there are now reports that even in Kedah, for example, and perhaps elsewhere in the country, this is also seawater rise. Level rises are also affecting. So we have to remember that we are talking about a very, very difficult situation. Now, when we talk about climate finance, I think it is important to recognize that we are well under what was promised. And even the promises which were made, for example, in 2009, have not been met as far as the rich countries were concerned. They made a number of promises to get away from the Kyoto Protocol commitments, and they promised 100 billion annually until the year 2020, and they're supposed to increase commensurately thereafter. None of that has ever been achieved. About half of it has actually been delivered, and most of it has gone to what is called climate mitigation. Now, when we talk about climate change mitigation, we are talking about, again, a very ambiguous things, because all kinds of things are being now, people want to count all kinds of things as climate change mitigation. Just moving away from from coal to diesel is considered climate change mitigation in some quarters, and so on. So we are talking about a whole range of problems as far as mitigation is concerned. And when we talk about climate finance, most of the interest, especially in the rich countries, is in mitigation. Now, it's all well and good if you have a compatibility of targets, where you can make money as well as mitigate at the same time. But unfortunately, problems are not always so aligned. And so you have a situation where we have a disparity between these different objectives, grossly speaking, and we do not have much money going into climate mitigation. The situation is even worse when it comes to other problems. Climate change adaptation, for instance. There's very little money going to adaptation, and almost zero money going to compensating the poorest countries for their loss and damages. So we have a situation where climate finance is woefully inadequate, and unfortunately, the main international institutions which should be providing leadership have failed to do so. So the World Bank, the previous World Bank president, Jim Kim, for example, before he resigned, he announced that he was joining a private company. It's supposed to raise a great deal of money. And more recently, we have heard on behalf of the United Nations Committee, Mark Carney, the former governor of the Bank of England, more or less talking about 130 billion being available for climate finance. It's all very all very well to talk about the money being available. The question is what is being delivered. And as we know very well, unfortunately, very little is being delivered. So the alignment of targets is very important. And now we have a situation where even targets are being redefined and changing all the time. So I think we are in a very, very dangerous situation in the world today, where we don't seem to pay very much attention. Almost nobody is paying attention to the major problems. And the smallest countries, especially the countries in the tropical zone, which are most vulnerable for a variety of reasons, which I won't get into right now, have very little to help them. So you can imagine that that how difficult it is to get people to work together to try to address these problems. I think I've said enough at this point, and let's hear from Azwan as well.
No, great opening. And I'm just going to very quickly summarize. You've actually set the scene very nicely, and you brought in very important points around the macro aspects of the reality as well. It's not a singular issue with a linear path. There are many elements to it, and of course, geopolitics being one of those, but also, promises being made, promises being delivered, question mark. So, Joan, love to hear your views on that. What does a climate resilient Malaysia look to you?
Thanks, Junice. Firstly, thanks to EcoBusiness for inviting me to this. And thanks for putting me next to Prof. Jomo, who I respect very much. We've had, common platforms before with Tan Sri Azman in the last session where I met Prof. Jomo at his house. And then the other danger is to follow up with Prof. Jomo is, to find something smart to say that he hasn't touched. So I'm not going to repeat what Prof. Jomo said. I think he's done a very good job of explaining, equally what I think are frustrations. But maybe I'll answer it in two ways. Number one is, as a Malaysian, what does climate resilient look like as a citizen? I think as a hopeful citizen, I look at climate resilient as a Malaysian that looks at policies and practices across multi-generation. I think today, too often, government policies as well as business practices look at a very short term and short, they call it mid-term, but actually it's really still short term. I think we need to think about multi-generational decisions and to look at returns, I guess, over a longer period, and and practices and effects over a longer period. So that's and then that's a motherhood statement, but it actually drives quite a number of the decisions and the hard decisions that has to be made by policymakers and decision makers. From a business and investments practitioner, which I guess I'm much more comfortable speaking on behalf. I think what I would look at is opportunities. Prof. Jomo, pointed out that there are opportunities out there for climate resilient businesses, and I think too often many people today, as they are grappling to understand what climate risk means, look at climate resilience as a risk, as a cost. Sorry, not risk, as a cost. Whereas actually there is both a cost-saving approach to climate resilience, avoidance of stranded assets, for example, the belief that there are assets that will be stranded in the future if the population and the move towards climate aware businesses, right? So that's one. And obviously there are opportunities to make money. And I do sincerely believe that, smart investors, smart businesses who have a very good understanding of what climate resilient businesses mean can actually get the benefits and the returns in the immediate term. Again, very motherhood statements, but that is my belief of what a climate resilient Malaysia is, and we just have to start thinking over a longer horizon as opposed to the typical IRR and exits from a business and investor mindset.
Very helpful. And I'm going to hold you there, Joanne, if you don't mind. And this came to mind when you talk about short-termism. I think it's definitely indicative of the problems we're facing right now. But that said, I think there's a lot of consensus right now that, Bank Negara Malaysia, even Securities Commission, is driving a lot on the policy regulatory front, and the most obvious one being, finalizing the TCFD application guidelines in June this year. And of course, TCFD, being one of the most significant developments, not just in Malaysia, but around the world in terms of, getting companies to understand fundamentally what climate risk is, from a strategic standpoint, risk management standpoint, implementation standpoint. So, from your view, how would you sort of, gauge the consensus among Malaysian companies today versus, even their overseas counterparts? Are they really, is there really traction amongst Malaysian companies in getting a sense of climate risk awareness?
So, at the risk of generalizing, and obviously, Junice, you'll see this in many other markets as well, right? So yeah. I would first and foremost say there are companies who fully really understand the issues of climate risk and the effect of climate on their businesses. And these are MNCs and local companies alike, especially the local companies who are close or have had international exposure or international business, right? So there are good understanding there. But I would argue that the general consensus today would be that people are aware that they need to take action. They need to be sensitive to the matter, but do they fully understand what climate risk is? I think largely a lot of people today are still grappling for full understanding. And it also reflects in some of the declarations or disclosures that they make. Often I find it very frustrating that a lot of people believe having a sustainable policy is issuing a sustainability report. And then I'll tell you what the other frustration is. You compare the first sustainability report with their strategy, it doesn't match, right? So clearly two different teams in the company, in the corporate that's drafting this, right? So there is a danger that largely corporates or an average corporates are doing it because there is it's a trend, because Bursa requires it, because SC requires it. But do they fully understand what climate risk is? Do they really understand how these risks affect their businesses today and in the future? I think they're still behind, and definitely behind the companies in more developed markets. Saying that again, I do not want to take away credit from some of the local companies and MNCs in Malaysia. I've seen some impressive moves and disclosures being done. And I really hope companies like those will be appreciated by the market as well.
Yeah. no, absolutely. I think we'll go back to that because I'm sure lots of people want to find out a little bit more around, the leaders, what they're doing, get into, I guess, obviously also to replicate some of that success. Professor Jomo, I want to sort of shift that back to your, I guess, your views around frustrations on mobilizing capital, in particular for capital resilience, and you've been a long time advocate for a fair and a just transition. And I'm sure this requires consistent level of funding to the projects that, can shore up enough confidence over the long term. Tell us more about your observations, on the state of affairs in capital mobilization. What is working and what else needs to be done?
Thank you, Junice, and thanks, Azwan, for those very insightful comments of what's happening on the corporate front, which obviously I'm not involved with, and so I'm learning as I listen. I think what we have as in terms of capital mobilization is this view, and unfortunately, it's very often quite naive. This view that it's really left to making sure that corporations do the right thing. And corporations do the right thing because we are living in the age of finance capital, at least for the last few decades, that it is a matter of influencing finance and the direction of finance. Hence the influential role of people like Mark Carney and Jim Kim and so on and so forth. And they're all very well-meaning. I'm sure they're quite well-meaning. But the problem is that at the end of the day, there are two big problems. Number one is that the alignment of incentives is simply not there. And the only way you can make sure that the incentives are aligned for corporations to do the right thing is to make sure that your regulatory framework is such that the incentives are aligned. This is one major problem. Simply leaving it to the market as and expecting, that pious appeals to ESG and so on and so forth are going to do the trick is simply not working and not going to work. Tariq Fancy, who used to be in charge of sustainability investments at BlackRock, wrote a very long essay, which you might all be very familiar with, but I would commend it to listeners who may not have read it. Basically saying that a lot of what is going on in terms of climate finance is unfortunately greenwashing. Okay, so we do not have any serious alignment, and it's quite understandable because the priorities of companies is to their investors. Milton Friedman continues to rule. The managers are going to be fired if they do not align their performance with what their shareholders expect. Now, perhaps EPF and CPF are slightly different, and certainly I would say that government-linked companies in Malaysia and perhaps else in some places elsewhere have perhaps tried harder. But trying harder is just not good enough if you do not have the incentives aligned. So you really need to have a regulatory framework which ensures that those incentives are aligned. As you said, I don't want to sound as if I'm blowing my own trumpet, but when I was working at the UN and even before that, I was really trying to advocate for a number of areas where you could do a lot of much more in terms of trying to ensure that kind of regulatory framework. Before I went to work at the UN, in Malaysia, for example, there were two things around the turn of the century which some of us were advocating. At that time, of course, there was very little interest in climate change. And the two things which we were advocating was, number one, to continued promotion of biodiesel. This was even before the rich countries, US and Europe, committed themselves to bioethanol in the US and biodiesel in Europe. Okay, now I'm old enough to remember that way back in the 1980s, people like Tan Sri Augustine Ong and Tan Sri Yusof Basiron in Malaysia who were at that time running Porin were already talking about the feasibility and the competitiveness of biodiesel. And let's face it, palm oil is by far the most competitive major vegetable oil in the world. So there was a real possibility that as we move towards, as Europe moved towards the biodiesel, and the rest, some parts of the rest of the world might have followed, we could have aligned this. But unfortunately, this didn't happen. This didn't happen, and we have not seen any significant move. And what has happened is that Malaysia, for example, is way behind Indonesia in terms of trying to promote the use of biodiesel. That's just one example. The second example was that, as we now know with the benefit of hindsight, over a quarter of a century ago, the unit cost of photovoltaic solar panels basically came down to about 6 cents per kilowatt hour, and there is very little likelihood that it can go down much further. Okay, under certain conditions, you might get it down to about 5 cents, or even slightly less, but it's basically about 6 cents. Okay, now basically what we have then, and I benefited a lot from my former classmates who were engineers and so on, who basically said that there's no way you can go much below this. Okay, so basically I was eventually convinced, and although it took me a few years to learn all this, and we was trying to promote the idea of developing an industry in Malaysia, photovoltaic solar panels. Now, just to put it in perspective, the Malaysian car involves more than 4,000 parts. Okay, and a photovoltaic solar panel at that time involved less than 200 parts. Okay, so it was something which was attainable. There were no strong intellectual property rights to prevent access. It was all up for grabs. Later on, when I joined the UN, unfortunately, very few developing countries had gone into photovoltaic solar panels in a big way. And so it was when we proposed the Global Green New Deal way back in 2008, it was possible for the rich countries to export both wind turbines and solar panels. Today, it is developing countries which are producing both wind turbines and solar panels very, very competitively. For solar panels, China produces more than 70% in the world. Korea and Malaysia are the second largest producers. Unlike China and Korea, almost all Malaysian solar panels are produced for export. We hardly use any of them ourselves. There are no strong incentives to go that way. Now, about 3 decades ago, we could have gone in the direction of requiring, when we were issuing, Malaysia was issuing IPPs, independent power producers, licenses. That was a very, and we had lots of companies, private companies, which got into the act. In fact, at that time, TNB had a clash with the government of the day, Tun Mahathir, because they didn't agree with the need to go private as far as this was concerned. But that TNB could have risen to the challenge, could have. But in any case, we went that way. And what did the private IPPs do? Instead of going green, they have become even browner. They switched from diesel to coal, and dirty coal, as I mentioned earlier. So what we have is a retrogression in Malaysia. Okay, so getting our incentives right depends very much on the regulatory environment. It is not enough to make appeals, to the banking system or to the Securities Commission and so on. What you really need to do is to make sure the incentives are aligned for us to make the effort. But the big problem, of course, right now is that there's very little incentive for developing countries to do very much when rich countries are not even meeting their obligations. Rich countries are not trying very hard, and they are certainly not delivering the kind of finance which is needed by the poorer countries. How do you expect Vanuatu to do anything about mitigating climate change when in the condition they are in right now? And we think about all the small island developing states. If you think about the hurricanes which are happening, which are devastating them almost yearly, in one or two cases, even twice a year, we are in a very bad situation. And unfortunately, there is no global leadership. And when you have global leadership, there's no global leadership. The national leadership tends not to be aligned with it. And there's no incentive at the national level to be seen to be doing the right thing.
Right.
Thank you.
Thank you. And if I may ask one question coming out of that, and let's keep it short. But I'm curious to know, from your point of view, China being a really interesting player today in the scene of green bonds, for example, boosting carbon markets as well, and of course, even incentivizing their own industries to to flourish on the green front. What is your view in terms of working with with China from a Malaysian standpoint? Is there any opportunity?
I'm not sure what you mean by working with China. I think let's face it, we live in a Cold War. We are living in a Cold War situation, and this Cold War has been going from bad to worse for the last 8 years at least, ever since Obama's pivot to Asia. Okay, the pivot to Asia was basically the launch of the Cold War. And so we have a situation which is going from bad to worse. So working with China can mean many things to many people. I think that the Malaysian position should be very much aligned with the position of ASEAN, which has been for half a century, the commitment to ensuring that Southeast Asia is a zone of peace, freedom, and neutrality. And I would add nuclear-free as well. That is extremely important. We have a situation right now where time and again, ASEAN members are being drawn, sometimes quite innocently, quite naively, into the Cold War. During the last few months of the Trump regime, as they were trying to secure to get a limited war so that they can get re-elected on the basis of the kind of thing which Mrs. Thatcher successfully did with the Falkland Islands in the early 1980s, or George Bush did in the early part of the century with the Iraq War. That was what they were looking to, and there were a lot of pressures for various reasons which we still don't know. President Trump resisted those measures and did not go with that. But there were a lot of pressures on Southeast Asian governments to have so-called joint military patrols with the US. And that joint military patrol could easily lead to some kind of skirmish, and then you can have a limited war situation. Now, you cannot predict what is going to happen in a limited war situation. And to make things even worse, in Malaysia, there were politicians from the ruling party, from the former ruling party, who were fighting among themselves in terms of exaggerating the China threat or underestimating the China threat, depending on your perspective. So, working with China can mean many things, okay? And if you look at it from a Vietnamese point of view, China basically has dammed many of the rivers which go into Vietnam, and the quality of water has been compromised. So what does it mean to work with China? I think there's a great deal which we can learn from China. China has been, I remember the late Menteri Besar of Kelantan, Nick Aziz, was quite keen on getting a Chinese company to clean up the water supply in Kelantan, which unfortunately continues to be quite poor. Okay, and so working with China can mean many things. But I think for many Malaysians, for example, the East Coast Rail Link is basically, for many people, it is a scam. So we have to be very clear about what we mean by working with China. I am quite keen that we remain non-aligned politically, and what it means is, of course, very important. Neither do I think that we should go all the way with the US. That would be disastrous for a whole variety of reasons, but maintaining that is quite important. Now, whether or not some green bonds is going to do the trick, as I say, the success or otherwise of bond issuance and so on and so forth depends again on the alignment of incentives. And as Tariq Fancy has reminded us, we need to think very, very seriously before we just, sort of do anything we like and hope that ESG will take care of it. Thank you.
Great points. Thank you very much. Thank you. Okay, I'm going to shift gears now and focus on Juan as well. Very important question, since your track record comes very much on the institutional investor front. When it comes to establishing sort of the building blocks on responsible investment, you've been trailblazing a lot of that. And as far as I know, since the early 2000s, from your experience, how do you think an institutional investor can really move the needle on climate action, especially when it comes to, shifting mindsets, putting pressure on the rest of the financial community downstream?
Thanks, Eunice. Yeah, as I was explaining to you just now, that actually, Khazanah, where I was with between 2005 and 2016, had actually started a sustainable development investment sector focus back in 2007, right? Way ahead of many other institutional investors. And that was from the back, the thinking around, number one, understanding trends of the future. Number two is understanding the risks from a Malaysian perspective, and obviously where there are opportunities to make money. Because again, Khazanah is an investment fund that does need to provide the returns for its shareholder, which is the government of Malaysia. But the other angle from Khazanah back then, or the other thinking around from Khazanah back then, was how do we advocate good practices among our investee companies? And that was a project that they undertook, that we undertook in driving what was coined as true value back then. And I would argue Khazanah was trailblazing that, in those days. I think what you see today is a lot more awareness within the institutional investor group. You do see, obviously, EPF, but also the likes of Co-op, PNB, and everyone is actually now, putting out statements and targets on how, where they're going to place their capital. So PNB more recently had committed, sorry, the number escapes me, X billion ringgit into renewable energy and sustainable energy investments. EPF and PNB both have stated that we have a sustainability investment strategy and criteria which we apply on our investment companies, but also on new investments. And this is a way of us looking at, again, climate resilience, climate risk, and businesses that will sustain over time. And of course, a lot of the members of EPF would question whether these are the right decisions to be made for returns, right? Everybody, all Malaysians or in Singapore, in the CPF, worry about their dividends more than anything else. But what we're saying is there is actually proof that good returns and avoidance of stranded assets are good reasons why you would want to push our investments to abide by sustainability concerns and sustainability criteria. So, I think those moves that have been made by the likes of Khazanah, EPF, PNB, and also Temasek in Singapore, where I worked with them on developing their sustainability and impact investment framework back in 2017-18. All these institutional investors are putting in place advocacy or shareholder activism, where we would, number one, work with investee companies to drive them towards putting climate change and climate risk at the top of their risk framework. Yeah. Looking at opportunities for cost savings where there are low-hanging fruits, because you just got to think about, again, opportunities for savings, opportunities for recycling, but also the avoidance of stranded assets. And lastly, actually, moving the markets with our capital, because in situations where we believe companies do not follow the criteria and the trends that we are seeing, then EPF and the likes like EPF will actually move our capital elsewhere towards companies that are putting in place, proving that they are sustainable over a longer period. And we assure our members that these are actually for their benefit, because we believe that's where dividends, not just short-term dividends, but longer-term dividends will be driven, and the capital returns will be driven from. Actually, Junis,
yes,
sorry,
go ahead.
just coming back to your question about collaboration with China, I actually put it much more general as collaboration with countries where there are products, investment structures where sustainability can drive capital. Maybe I can speak a bit about the work I did in Tenaga, where I was a chief international officer, and I worked with the senior management of Tenaga to pivot all of the international businesses away from conventional to green, to renewable. And I don't think many people give enough credit to TNB for that outside of Malaysia. I think what Tenaga has done well was actually establish a very good platform in the UK, and learning from the UK experience into the markets of Malaysia and where else it operates. I think that's where collaboration from businesses standpoint, right? Being brave in entering into developed markets, because we believe we knew the energy market and we had the right to compete, but also once invested in there, build real presence on the ground to learn and bring back that capability. And again, I don't think Tenaga gets enough credit for what they've done in the UK and how that's been applied to the other businesses. Sorry about that.
Very interesting. I like those insights. And I'm curious, even I'm sure many people will be wondering, can you tell us a little bit more about the collaboration in the UK?
Sure.
How did it come about even?
So actually, again, I think companies Tenaga very early on, before I joined, was looking at renewable energy from an alternative energy angle, right? And today in Malaysia, there are certain restrictions on where Tenaga can play, because the policies of Malaysia on renewable energy is, especially on solar, is to democratize the industry to many players. And there's reasons for that, right? You'd want many of the small, medium enterprises to get involved. So what Tenaga, and for Tenaga, it's such a large utility with a fairly heavy, fairly strong balance sheet, but not necessarily the cheapest cost of capital to compete in Malaysia. Decided why not we look at other opportunities, other markets. So they did go into several markets. UK was one of them, because that's the most advanced in Europe, other than Germany, and invested into a couple of renewable energy businesses, wind and solar. And when I went on to be chief international officer, the difference was we decided to take control. Before that, they were financial investors to learn. By taking control and then converting that into a renewable energy platform, and having our own management team, our own being, we hired locals. We have a UK-based CEO working with the Tenaga, staff as well. Actually ran that business, understood what it meant to compete in the UK business. Actually also participating in various structures that the UK had in place for renewable, and then applying that to other markets, as I said. So there is a company called Vantage RE, which is 100% owned by Tenaga, and they've been growing very actively. I'm very proud. I consider that one of my babies, and seeing how that's grown. But more importantly, not just that's a good business, but how Tenaga has learned from that to apply to other parts of its business in Malaysia and elsewhere.
I see. Very interesting. Okay, I'm so conscious that we have about 30 minutes now before we actually have to close. So, and there are questions coming in. I'm going to hand this now over to Samantha for a bit, and let's address the Q&A questions. Samantha?
Okay, thanks, Junis, and thanks both to Professor Jomo and Juan for very insightful responses. I think actually, since we're on the topic of energy and Tenaga, we actually have a very relevant question from Jin Kiat Ong, which is about how we can sort of clean up Malaysia's energy landscape. So the question is, Malaysia continues to sell or export its gas, which fetches higher prices, but at the same time, we're importing and using cheap or low quality coal. So the concern is that this kind of shows double standards, empty promises, and how can we sort of trust either the politicians or even Tenaga and other utility providers to kind of address this situation and
Foster trust.
clean this. So maybe we can start with Juan if you have a response to that.
I do, and you see, okay. So first of all, let me say I'm responding this as a not from Tenaga's perspective. So I just wanna answer that. But I think having been in the organization and having been in discussions on energy policies in Malaysia, from that perspective, I think there is a balance, right? Affordability still is a key issue for many Malaysians. So as Ginkiat correctly pointed out, we sell gas which is deemed as cleaner, and then we take in cheap, low quality coal. But the cheap is there, right? And that is what allows for the energy prices to be where it is today. That's the reality of it. Now, I think first and foremost, I wouldn't, sometimes we blame politicians for many things. And some rightly so, but and I don't want to talk about that. But I think it is also what the Rakyat is asking for. The Rakyat is asking for affordable energy. I think the one thing I would argue is for us to drive even cleaner sources of fuel. Let's not talk about coal. Let's talk about wind and solar and batteries and things like that. There will need to be investments being made into the grid. There will need to be some increase in the cost of supply. And I'm not talking about increasing it to higher than market. Just bringing it to market. A lot of people still, I guess, do not realize that the energy prices in Malaysia, electricity, is among the cheapest in the world. And there is a trust deficit with governments, decision makers, Tenaga, that people do not believe when the government says this, when Tenaga says this. But actually, if you do look across many markets, just look in Southeast Asia, we do have one of the largest electricity and energy prices. So being able to bring that price up to market, right? Then therefore being able to introduce new technologies, strengthening the infrastructure such that it can take more renewable energy. That's how you would drive then, Tenaga utilities, IPPs towards putting in the right fuel source and the right energy mix. And lastly, I would argue that I think it's time that we start ensuring government policies are put in place to drive investments into sector and not to guarantee returns. I said this at ISES last Tuesday, and I know a few people came back and said, wow, because that's what it is. Sometimes a lot of, I call it lazy investors and lazy operators, expect government policies that give them a fairly good return, as opposed to being competitive and being smart investors and choosing the right technology, choosing the right business models. I even advocate a market without PPAs or shorter term PPAs, as opposed to being purely reliant on Tenaga's balance sheet. That was something I said also. So anyway, so I digress. But the point is, I think the market must understand that there is a cost implication, and again, multi-generational policies to be put in place, and that will help the system. And once we get to that point, then the market will drive where capital will be placed, because that's where they're going to make the returns needed.
Okay, thank you very much, John. And it's very pertinent that you mentioned policies, because that's what Professor Jomo also referred to, in the sense that we need to be able to incentivize companies and actors to actually play a proper part in driving climate resilience and good climate action. So we have a question as well from BB, and maybe Professor Jomo, you would like to take this, about how Malaysian authorities and other regulators can incentivize the commercial sector to take up sustainable causes or climate-friendly causes, such as protecting rainforests and mitigating poaching of endangered wildlife.
Thank you, Samantha, and thank you to whoever asked that question. I think there's no general one-size-fits-all rule on how to align those incentives. They are very, very specific. not only to the sectors, sometimes to the product or the service concerned, and sometimes it changes over time as well. So it's very important for us to get into the details to ensure the alignment of incentives. I think one of the big challenges which we have in Malaysia is that much of the economy is in private hands, and much of the rest of the world. And when we think about, for example, the people who have been most responsive to some of these policies, as we have heard from Azwan, basically the main, the most responsive ones are really the GLCs. Now, GLCs by nature are large. If you think about what was happening in Kazana, what was happening in Tenaga, and so on. And I would add, besides Tenaga, I think it's very interesting that for example, Petronas has played a very important role in promoting the use of renewables in Vietnam. But part of the reason it was possible to do that was because there was a great deal of energy infrastructure which had not been provided. In the case of Malaysia right now, we have had so much investments in energy investment. And then you have the problem which was referred to earlier as one of stranded assets. What do you do with all the coal-fired generators? Okay, what are you going to do with them? Now everybody can start exporting them down the right. And down the road, I mean, who are you going to export to, right? You're just basically kicking the can down the road. And now you have this ironic situation where Europe is rediscovering the virtues of coal, less than a year after Glasgow and its commitment to get rid of coal. I mean, so when you have this kind of thing going on in the world today, you are simply not going to get things done, simply because the incentives to do so are shifting all the time. There is too much uncertainty. And this is why the abandonment of the Kyoto Protocol, as flawed and limited as it was, is a major step backwards. So everything now since Kyoto, which was from the 1990s, has basically been left to incentives, left pretty much to the market, to voluntarism. Now, you can get a few GLCs, for example, in the case of Malaysia, to respond. But what about the vast majority of medium and small size enterprises, which comprise, about over two-thirds of output? What do you do, for example, in the case of the large corporations, which are not government-linked, where the responsiveness to government incentive policies is perhaps less? So what do you do with that? This is why there is no alternative but for the government to step in with a regulatory framework, and not just one which is so market responsive that, because markets are moving all the time, right? You want to have some degree of, you want to have a North Star, to use the current jargon, right? You want to have some clear indicators, you want to have some guideposts, and you can't have guideposts which are basically, turning in the wind. And that's the problem which we have right now. So it is crucial, and I cannot overemphasize it, that we have some set incentives at the international level and at the national level. If we don't have that, or you have this kind of vague, nebulous things, we'll achieve net zero by the year 2050. I mean, that's almost 3 decades away, right? Yeah. All governments before 2049 will do their own thing. They will leave it to the government of the day in 2049 to try to meet the 2050 targets. This is just simply not going to work, okay? And we are not being serious enough about this. I think Azwan made some earlier points which I think are well worth emphasizing, that Right? There is actually quite a bit one can learn from China. Maybe I was a bit unkind earlier. If you think, for example, when China had its brown hopper problem in 2007, 2008, they went to the International Rice Research Institute, and they found there was only one entomologist left there. Okay, and then they realized they couldn't count on international expertise to solve their problems. So they went home and they developed a rice research capacity now, which is now cutting edge internationally. So if we are thinking about what to do with rice fields, where water is coming in from seawater is coming in, you really probably need to go to China, because you have now brackish water, rice which is being grown in brackish water in China. And this is absolutely essential for countries like Bangladesh and Vietnam. But increasingly, it would be quite necessary here. So there's a great deal we can learn from one another. But this is really on the basis of cooperation. And this is why, the fact that there are no strong patents on solar panels is an invitation for us to go in. And Malaysia is now exporting like anything, but look at the number of Malaysian companies involved. There's only one serious Malaysian company involved. The rest are all foreign companies who choose to locate in Malaysia for various understandable reasons. So we really need a determined effort. We need government leadership, which has a medium-term and long-term time horizon, rather than the short-termism which Azwan correctly eschewed. If we continue like that, I don't think we're going to get very far. Thank you.
Okay, thank you, Professor Jamal, and also for reminding us that it is we do need strong sort of leadership and authority from the top. And I guess being conscious of time, there is probably one or a couple of questions that I'll try to combine from the audience, and this sort of deviates slightly away from maybe direct climate financing, but Robin, our editor, eco-business editor, did bring up that we recently had the 1MDB sort of a verdict on our former Prime Minister, and the question is whether or not this would actually impact the attracting of sustainable investment and climate financing. And I think another very relevant question we also have is whether or not this sort of increases or maybe gives the impression of perceived risk when it comes to investing in Malaysia. Would you both like to share your views on that? Maybe Joanne, if you have any comments?
Oh, you start that with me.
we're taking turns, to be fair.
well, okay. I think I'm gonna answer it from a investment perspective, from a business side. I'll leave Prof. Jamal maybe to talk it a bit more on policy and foreign investment into the country. But from a business side, I think actually, despite what the public or all the noise is, I believe in terms of doing business in Malaysia, generally we've always had good responses. Again, it's difficult to generalize this, but obviously if you're EPF and someone wants to do business in Malaysia, they want to work with EPF because that itself is a de-risking exercise, right, for financial investors. So I think it's less the decisions on the recent cases. I don't know. I haven't had anyone come to me and said, oh, I'm not going to invest because the decision of that court. It was a lot more about how can are the business laws in Malaysia protecting them? Are the opportunities really there? More concerning are actually government policies, right? Our government policy is going to change. Our rules and regulations going to change. So maybe this is a short. It's just I have not had partners or foreign investors who are looking to build investments and asset and business here actually make reference to it. That's just my experience. But in terms of risk I think there are other risks. I mean, let's be upfront. The risk right now that many investors are looking at Malaysia is about political risk. The changes in government, the multi times that corporate leadership, GLCs at least, have changed. How certain projects have been cancelled. I think those are a bit more of a concern. And obviously with elections, being talked about, I think that's an overhang. But all those are very short-termish, and a lot of those are what people are looking at. More importantly, in the longer term, it is about how does government policies drive investments into the sustainability and into climate risk initiatives. I think that's where a lot of investors are looking at in the space that I look at.
Okay, thank you, John. Professor Jomo, do you have anything to add or share to that?
Thanks, Samantha. I think one can have a lot of jokes around this. Okay, there has been a flood of foreign investments into this country in the last year, you can say that it was mainly due to the verdict against the former Prime Minister, or you could say that it was despite that verdict. You can tell any story you want, right? But the fact of the matter remains that we probably owe it to some friends of the former Prime Minister, Mr. Trump and Mr. Abe. So Trump and Abe basically said, get out of China and reshore. Well, nobody really wanted to reshore in the US or Japan. So what they did was to come to Malaysia, among other countries in Southeast Asia. So Malaysia has benefited a little bit, quite a bit, I would say, from this. But you can take those same facts and spin any story around it. I'm sure the minister concerned would say, oh, it's due to my wonderful policies and all my hard work and so on and so forth. And somebody else could say, oh yes, it is because we passed the CPTPP and everybody loves the CPTPP and that's why we're investing in Malaysia now. You can tell any story you want, but the fact of the matter is that we really need to unfortunately, as the saying goes, the devil is in the details, and it's a very complex story, and we are living in very complicated times, and a lot of it, unfortunately, is very volatile.
Okay. Thank you, Professor Jomo. And I think on that note, actually, I would like to thank both our speakers today for helping to break down or shine a little bit of light on these complex and complicated topics, especially when it comes to how much things are changing and how quickly things are changing when it comes to the climate. I think I just like to, to close this session off by echoing a bit of what the speakers have said about how climate resilience is a moving target, but that doesn't mean that we can't be working towards it with better incentives from the top, from policymakers, and also from businesses who can look not just at costs but also at some of the opportunities and some of the options they have for cost saving as well. Junice, do you have anything else you would like to share or add?
No, absolutely. I really enjoyed today's session. And honestly speaking, I think we could go on and on so many directions. Perhaps if I may, I would like to ask just one last question, if I could. And really the question is, what is your top ask or request for policymakers and, within the financial sector when it comes to climate resilience in Malaysia? If we could change one thing, you could ask one thing. What is it that you have in your mind? But if I could, perhaps, Joanne, if you'd like to go first.
Okay, so it's tough to break it down into one, Junice. But I'm going to ask for something maybe too narrow, but it is a very simple ask, I think. I believe, and again, I'm going to focus on energy. because that's where I know best, right? I think where policies are there to incentivize large pools of capital to invest into Malaysia and drive the renewable energy growth or sustainable energy in a large scale. I feel that the current policy of democratizing energy, because to allow a lot of SMEs to come in, it has been good to build up interest in and awareness. But it also is a hindrance for many large investors. EPF, obviously, this is something obviously would be beneficial to us. But allowing consolidation, allowing actually capital to come in, not just from Malaysian institutional, but other institutional investors, foreign as well. Meaning that we need to start thinking about energy in Malaysia, not just from a Malaysian perspective, right? It is about bringing down costs. It is about bringing down the lowest cost of capital, allowing people to consolidate, build up structures and platforms where people can invest and then build even more. And so that would be my ask. I know it's very narrow, but allowing the industry to consolidate, allowing the industry to build scalable platforms. Therefore, that will attract actually capital from developing and developed markets in. And I truly believe that Malaysia can be a test bed for many other developing world, right? Just like how Tenaga invested in UK to bring back to Malaysia, actually Malaysia could be a very good test bed for Southeast Asia and other developing markets on energy in general. And that would be my ask.
No, great point. Thank you. I think it's true. You have power when you consolidate, and that shows up confidence as well. Professor Jomo, the last word is for you.
Thank you, Junice. And thanks to Azwan as well as Samantha for all you have done to facilitate this session. I think it's if there's anything which needs to be done, I would say that what we need are some meaningful, realizable guidelines, in fact, even targets for the medium term. To talk about the long term is not very meaningful in such a situation, but I think Azwan is completely correct in highlighting the significance of short-termism and the problems of short-termism. But we cannot rely simply on market forces. There will be, of course, market incentives, which are very, very important in ensuring and driving competition, etc., and competitiveness and efficiencies. But I think all that has to happen in a framework. That framework has to be set not only at the national level, it has to be set at the international level. And this is why I lament the absence of the Kyoto Protocol and the reliance on Copenhagen and particularly Paris is just not good enough as we now see. And if we are not serious about this, if we only rely every 5, 6, 7 years on when a COP, a Conference of Parties, is held in a developed country, we're not going to get anywhere. Okay, what we really need is a summit at the highest level to agree on a much more achievable and equitable framework for going forward. Unfortunately, right now, it doesn't exist and is not likely to exist unless some real leadership is provided. Thank you.
Great points. And with that, thank you so much, Samantha. I'm going to hand that over to you to finish off. Thank you very much for being great audiences today. And I'm signing out too. Thank you.
All right. Thanks, everyone, for joining us today. Again, I would just like to remind everyone that this is actually just the first session of Unlocking Capital for Sustainability by Eco-Business. And we do have upcoming sessions that will focus specifically on our where we have a regional presence in India, in Indonesia, and in the Philippines. And we also have the 2-day conference at the end of this month on the 20th and 21st of September that you can join. Thank you so much for being a great audience and for all your engagement as well. Do sort of keep the discussion going with our upcoming events. If you are interested in registering, the links are in the chat. And with that, I will close off. Thank you.